Hello everyone. Today I am going to explain you special items of non-trading concerns. So here first one is subscriptions. Subscription is the amount paid by the members periodically so that their membership remains alive. It is a source of income of not-for-profit organization or non-trading concern. Subscriptions relating to the current year, whether received or not, are shown on the credit side of the income and expenditure account. Subscription not received, that is outstanding, are shown on the asset side of the balance sheet. Subscription received in advance for the following year are shown on the liability side of the balance sheet. Amount of subscription is to be shown in the income expenditure account. Now next is donation. Generally, donation income is treated as the capital income and added to the capital fund. If a concern receives donation in the regular form, it is disclosed as the revenue income at the income side of the income expenditure account. When a person receives donation frequently and no instruction is given for the donation, in this case, donation is added to the capital fund in the balance sheet. Donation or charity received for a specific purpose will be treated as the capital income and disclosed separately as a specific fund in the balance sheet on the liability side. Now next is legacy. Legacy is the amount received as donation by a non-trading concern under will of a deceased person. The donor may or may not specify conditions for its use. In case no condition is specified, it is accounted as general donation, and if a condition is specified, it is accounted as specific donation. Then next is entrance fees. Entrance fees, or we can also call it admission fees. To be a member of a concern, new members have to pay admission fees or entrance fees. As per the provision of the constitution of the concern, entrance fees is treated as capital income or revenue income. Sometimes, as per the instructions, some part of amount of the entrance fees is considered as the capital income and some part of the amount is considered as the revenue income. When no instruction is given, the entrance fees income is treated as the revenue income. Now, next is life membership fee. Life membership fee is accounted as a capital receipt and added to capital fund on the liability side of the balance sheet. It would be improper to account life membership fee as income because a life member makes one-time payment and avails services all through his life. Then next is specific fund, or we can say that fund for specific purpose. Donation or charity received for a specific purpose is used for that specific purpose only. This kind of amount of donation is not added to the capital fund in the balance sheet, but disclosed as a specific fund. For example, President Felicitation Fund, Prize Fund, Building Fund, etc. As and when any expense is incurred in this regard, it is not disclosed in the income expenditure account, but it is deducted from the respective fund account on the liability side of the balance sheet. For example, if prize fund is received, then prize expense is disclosed by deducting it from the prize fund on the liability side of the balance sheet. If the amount of fund is invested in certain types of securities, the amount of interest received is added to the respective fund. If expense incurred is more than the specific fund amount, the amount of difference is treated as revenue expense and debited to the income expenditure account. Now, next is capital fund. Capital fund or permanent fund. Capital income except special fund received or income capitalized by the concern are disclosed under this head. It means they are added to the capital fund. The excess of income over expenditure of income expenditure account is added to the capital fund, and excess of expenditure is deducted from the capital fund. Sometimes, instead of adding excess of income over expenditure to the capital fund and deducting excess of expenditure over income from the capital fund, it is shown separately in liability side of the balance sheet. Now let us understand how receipt and payment account is prepared. Receipt and payment account is a summary of cash book and bank transactions during an accounting period prepared under appropriate heads of accounts. It begins with the cash and bank balances in the beginning and ends with cash and bank balances at the end of the accounting period. Receipts are shown on the debit side and payments are shown on the credit side of the account. It being receipts and payments account, receipts and payments of every nature are shown in this account. That is, whether it is capital or revenue in nature, or whether it relates to the current year, previous year, or next year. Receipts and payments account gives a fair idea about the cash position of an organization. Now let us understand how income and expenditure account is prepared. Income and expenditure account is like profit and loss account of a business firm. Since not for profit organization are not established for the purpose of earning profit, they do not prepare profit and loss account. Instead, they prepare income and expenditure account at the end of the accounting period to ascertain the results. Incomes are shown on the credit side and expenses on the debit side. The difference between the two sides is either surplus if total of credit side is more than the total of debit side, and deficit if total of debit side is more than the total of credit side. The surplus or deficit, as the case may be, is added to or deducted from capital fund. Income and expenditure account is prepared at the end of the accounting period, matching revenue expenses with revenue receipts to ascertain surplus or deficit. It is prepared following accrual basis of accounting. Therefore, revenue expenditures for the accounting period are taken, whether they have been paid or not. Revenue incomes for the accounting period are taken, whether they have been received or not. Non-cash expenses such as depreciation are accounted. Capital expenditures, example, purchase of land, are not considered. Capital incomes or receipts, for example, donation for specific purposes, are not considered. So that's all for today. Thank you very much.